everybody, Buffy the Rate Slayer here, and we are back with the latest episode of the July Weekly Market Insight Series, coming directly from the Capital Markets Trading Desk at Sunwest Mortgage Company. The market started the week on a flat note as investors were cautious ahead of major central bank policy decisions and corporate earnings. Equity market witnessed one of the busiest earning weeks of the season, with more than 500 major companies globally reporting quarterly results. The market juggled between the central bank policy decisions and earnings throughout the week. The Fed raised interest rates by 25 basis points to a range of 5.25 to 5.5% on Wednesday. This is the highest level in 22 years since January 2001. Chairman Jerome Powell indicated that the additional rate increase will depend on incoming data as they will continue their fight against inflation. The next FOMC meeting will be held on September 19th and the 20th this year, and the Fed will get adequate data to make further policy decisions before the next meeting. The market soared as investors are anticipating that the Federal Reserve has reached the end of the policy tightening cycle. U.S. economic growth unexpectedly rose at a 2.4% annualized rate in the second quarter, which was more than the analysts' forecast of 1.8%. Gross domestic product advanced in the second quarter by resilient consumer spending and robust business investment. The growing number will slow down concerns about a possible recession. The job gains averaged 244,000 jobs per month over the past 3 months, and the unemployment rate remains low at 3.6%. Initial jobless claims fell by 7,000 to 221,000 for the week ending July 22, the lowest since February. The supply and demand in the labor market are showing a sign of better balance. All right, on a global front, European stocks were under pressure as European corporate results confirmed weakening consumer demand. The European Central Bank also raised the benchmark rate by 25 basis points as per the expectations. West Texas Intermediate oil futures rose above $80 a barrel for the first time since April as OPEC decided for further output cuts. The International Monetary Fund raised its 2023 global growth forecast to 3% from 2.8%. The fund also expects an improvement in inflation from the last year. Global headline inflation is expected to fall from 8.7% in 2022 to 6.8% in 2023 and 5.2% in 2024. The weekly MBA mortgage index fell 1.8% after increasing 1.1% a week ago. The purchase index fell 2.5% while the refinance index was down 0.4%. Average 30-year fixed rate was 6.87%, which remained unchanged from the prior week. According to a report from the Federal Housing Finance Agency, home prices rose by 2.8% on a year-on-year basis in May. High borrowing costs and prices are restraining momentum in the market, which led to a decline in new home sales in June for the first time in 4 months. Purchases of new single-family homes fell by 2.5%. All eyes will be on the market's movement in the coming months after the Fed rate hike and better than expected economic growth numbers. So that's all we have for this week, everybody. Join me again next Friday to get updated with our news, and our trading desk will keep you informed with our pricing incentives. Get out there and have a great day, and also have a great weekend. Buffy, out.